Hello, Mr. Okeshe.
Yes, I can.
Fantastic. You're live on the show now, and don't worry, you're gonna get that water at some point. But let's start the show now. You know, since the arrival of the new leadership, the interest rate, we've seen interest rate increase twice, from 18% to about 24.75%. How would you describe cost of doing business in the first quarter? I know you're a businessman. Hello, Mr. Okeshe, can you hear me?
Okay, thank you very much for this great opportunity.
I don't know if you heard my question. Okay.
Okay, thank you very much.
Mr. Okeshe, can you hear me?
Yes, I think there's a little bit of delay though, but if I can go on.
Yes, you can. You can go on. You can go on.
Okay, great. So, look, the environment is getting better at the moment. You know, there are a few challenges here and there, but I can tell you that what's happening? Excuse me.
All right, so we're having issues there. We're going to try and get Mr. Okeshe. We'll still try and get him on the show now. Have a little audio issue right there. But definitely, it's all about what the MPC is going to do next. And the meeting, that's starting today. Tomorrow, we're going to get the decision. But definitely, we're going to try and get Mr. Okeshe to find out how businesses are doing. You know, right now, the first quarter, we're seeing cost of credit at high levels, you know, right now. Definitely, if you're going to the bank to get credit,
I'm hearing, but I can't.
Paying a lot. But Mr. Okeshe, you can hear me, right? Okay, we're still going to try and get that audio. Oh, you can hear me very well. Okay, so as I was saying, you know, definitely we've seen, you know, interest rates up about 600 basis points. But we'll get back to Mr. Okeshe. Let's bring in Mr. Olatunde Amolegbena, MD, Arthur Stevens Asset Management. He's also joining me via Zoom. Great to have you on the show, Mr. Amolegbe.
Thank you, Ladi. Thanks for having me.
Yeah, fantastic. So definitely it's all about what the CBN MPC is going to do with rates at this time. How are the markets bracing? Because right now, everyone's expecting another rate hike, maybe about 100 basis points or maybe 200 basis points. How are the markets bracing for this?
I think that you're probably right on the balance of scale. We're most likely to see another rate hike, maybe not as aggressively as we've seen in the past. Nobody's expecting a 200 or 300 basis points increase this time around, because, I mean, if you look at it, I'm sure some of the members of the MPC will look at what they've done in the last few months and think that, you know, it is actually having impact on the market. They probably see some level of stability in terms of the FX market. They probably see inflation rates slowing. Maybe not started coming down, but the rate of growth of inflation is slowing. We are not seeing month-on-month inflation increasing by 300%, by 300 basis points as we have seen. From March to April, where we saw something like 100 basis points increase in inflation rates. So some members might feel that, you know, the tightening measures is having some impact. But I figured that some other members might also feel that, you know, the pass-through of the increase in interest rates in terms of the cost of borrowing for manufacturers and other service provider could also be exacerbating the inflation rate. So, you know, the CBN MPC, I feel, will have to sort of seek a balance. We've not gotten to the point where we'll start seeing a situation where they start to ease the tightening. But I think that, you know, maybe a 50 to 100 basis points increase this time around might be appropriate.
So definitely, talking about, you know, the inflation numbers for April there, we did see it's another rise, but a deceleration at this point. Not as Mr. Amolegbe mentioned, the rate of rise is not as significant as we've seen in other months. We've seen food inflation still at that 40% level, 40.53%. That's for April. Headline inflation 33.69%. So, Mr. Amolegbe, looking at these numbers now, is it safe to say that inflation could be peaking, in Nigeria?
I think that we are getting to the point where, honestly, you could even be seeing some level of consumer fatigue. You can only move price, so much before you start seeing resistance from even your consumers. So when manufacturers start or sellers start seeing situation where the volume starts to drop relative to what they used to sell, simply because they are moving prices too fast, then you could see that resistance could also be helping to slow inflation. And I think that this is part of what we're witnessing at this point. And so ultimately, we're probably not going to get to the point where we start seeing inflation rate starts to drop. But then in the next few months, what you're likely to continue to see is a situation where the rate of growth continues to slow. So there's a bit of apathy, consumer apathy on one side, and also the resistance on the side of manufacturers and sellers to continue to continue to make an effort to pass over the increased cost to the customers. So something has to give, and I think we are getting to that point now.
Right, and definitely, well, even in the U.S., we're seeing, the central bankers trying to get back to that inflation target of about 2%. But looking at countries like Nigeria, is it time to start shifting the inflation target, seeing how high or how far away we are from that?
It's clear that though the CBN governor had mentioned that they are targeting an inflation rate of 21%, we don't seem to be moving anywhere near that level. Even the direction of the inflation seems to be north rather than south. And if we are going to achieve that inflation target he has stated, I will assume that we're in May, we should start to gradually be seeing rates start to move south gradually, but we're nowhere close to that. So it might be appropriate for them to take a look at their figures, take a look at what is happening in the economy in general, and probably adjust their expectations to meet with reality.
Right, definitely. Reality is hitting everyone at this point. But talk to me about the markets now. We're expecting the decision by tomorrow. The meeting is starting today. How do you see the markets reacting? Well, definitely consensus is that there will be another hike. Are you expecting the equities market, investors there, to react to this, or it will just be correction as usual for the NGX All-Share Index?
We've seen, the equities market has always been a forward market. So some of these issues are such that analysts will have worked into their evaluations already. I think that we've probably seen some level of correction already to account for this expected result from the MPC tomorrow. I think that even after the result is, the announcement comes out after the meeting, there might be some level of correction. I do not see a significant drop in prices, given that correction has been happening over a relatively longer period. But I expect that the correction will still continue, and then we'll probably achieve some level of stability, maybe by the third quarter of the year, when we see what the impact of some of these policies on inflation, and we actually see that the inflation rates actually start to come down. But for now, in the equities market, I expect that correction will continue. The bond market and the fixed income market, we are not. It seems to me that investors have arrived at a point where that market doesn't seem to be moving in tandem with inflation. So doesn't seem to be moving in tandem with the policy rates. So you see situations where the last auction, the stop rate was something in the region of 20%, while the policy rate is not of 24. So, and we've seen that now seen that happen in two auctions, two T-bill auctions now. So I think that the fixed income market seems to have achieved some level of stability when it comes to rates. The equities market will continue to react, but albeit at a steady rate.
Right, we'll definitely keep watching, but corrections, present opportunities to some investors. Where do you think investors should be looking at? What sectors should investors be putting in focus right now as we see all of these correction on the NGX?
But it's clear that we are not going to continue to see correction. We are not going to see a situation where inflation continue to rise, ad infinitum. And interest rate is also not going to continue to rise ad infinitum. So my advice as a stockbroker will be for investors to continue to look at some specific counters. On a general basis, you see a market that is generally cheap anyway. But because of the correction and because of reallocation of assets to different portfolios, we're seeing some of these counters that are already cheap even become cheaper. So I'm looking at counters such as those in the telecom sector, those in the industrial sector. They were relatively cheap before. Because of portfolio reallocation, they have even become cheaper. So I would look at counters in those sectors. The banking sector, of course, the expected recapitalization will continue to have some sort of dampening effect in that sector, but that does not mean that there are more counters there that are still bear very good value for us in our organization. So, in terms of priority, I will look at the telecom sector, followed by the industrial sector, and then a few counters in the banking sector. My advice is, of course, to position ahead till when things do turn around, because at the point things do turn around, one might be chasing the market at that point, and as an investor, it's never a good advice to chase the market. Right. To position ahead.
Yeah, definitely better to be ahead of the market, definitely as an investor. Thank you so much, Mr. Olatunde Amolegbe, MD, Arthur Stevens Asset Management Limited. Thank you so much for coming on.
My pleasure. Thanks for having me, Lady.
All right, we'll take a break now. When we come back, we'll get back to the first conversation with Mr. Tercio. I think we should have sorted the audio issues by now. That's in a moment. Just stay with us.